Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me live at the market site is Jeff Kilberg with KKM Financial. We're going to discuss, is it time to start trading your portfolio tactically? Jeff, it's always great to see you, and thanks for joining me over at the market site. We have a lot to catch up on since last month. Let's talk about that M&A activity. It's really heating up with AT&T and Time Warner, and see a number of healthcare bids out there as well.
Well, I think it's fascinating to see. Let's look at Comcast. Let's look at Disney. Now we're looking for Disney to come back to the table after a 19% jump in Comcast offer. So this is a really big deal, and it's driving sentiment today. You're really seeing this kind of heal a lot of uncertainty out there, and certainly this week has been filled with big expectations, a lot of mixed emotions as we've seen all over the market, people kind of coming in, but at the end of the day, the sentiment is strong, and I think M&A is really helping that.
Well, there's a big week for economic data, particularly around inflation with CPI and the PPI. We had the FOMC rate decision yesterday. Based on the language from the presser and the data that's been coming out this week, do you think we're going to get that fourth rate hike in December?
I think we do. And initially, we had uncertainty about that. But ever since they came out a couple weeks ago and said they wanted to see inflation run a little bit hotter, then they came out with a pretty hawkish statement yesterday, alluding to the fact that they are going to go to the fourth. So it's been an interesting 1-2 punch. Very hawkish. Fed had some market uncertainty yesterday. Then comes in Super Mario Draghi out of the ECB to save the day once again, Jill.
So how are the bond and futures markets reacting to this?
Well, you're seeing some buyers come in, and inversely, as you know, the 10-year yield dropping. So down to about 2.93%, as yesterday after that presser, we were close to 3%. However, we continue to focus on that 2-year, 10-year spread, that narrowing of that spread, down to about 40 basis points. And as you know, if we see some type of inversion, that should predict a recession.
All right, let's take a look at crude oil. That's also going to be in play with OPEC meeting in Vienna on June 20th and 21st. Russia's proposing to go back to October 2016 levels. Saudis are floating that idea by as well with an increase in output. In the meantime, the IEA is saying that global demand is going to uptick.
That's right.
So, okay, more supply, more demand. What's happening with the price?
I think it provides a range for us, right? We went down, tested at 65 level, went back above 67. But at the end of the day, we saw a couple weeks ago when Russia and Saudi talked about increasing production, that allowed a lot of people to book profits. But I think when you look at the commodity space of crude oil in conjunction with the stocks, a lot of those energy stocks have found a way to heal and grow. And I think as long as we stay range bound, those stocks that we really like and have participated in will continue to go up as we see that $75 back and fill on the chart.
Well, there's more trade war rhetoric back in the headlines as well. Are you surprised to see how well the markets are digesting it, or is it almost like the little boy that cried wolf? We hear it every day now, and it just doesn't make that impact?
I think we are a little conditioned. We are a little desensitized, but right now we did see some news come out that we will see these China tariffs tomorrow, about 900 names versus the 1,300 initial names. So I think that was a little bit of a bolster to the markets, but it's all about this tit for tat. Whatever we do to China, they're going to come back, and the rhetoric is heightening. However, the market is completely discounted, to your point.
All right, and to wrap it up, are you tactically trading now around all these headlines and fundamentals that are on?
We are utilizing a lot of option overlays. This is a time whenever you look at the S&P 500, we really like to take in some of the fundamentals, the point and figure, if you will, but understand the range that we are in. We've had a sensational range. We're back up at 2,800 in the S&P 500. We're at new all-time highs in the Nasdaq 100. So this allows to put in some type of option overlay if you're utilizing a covered call or some type of collar. This is the time to implement because premiums in options are very low and very inexpensive.
All right. Well, thank you very much, Jeff, as always, for joining me. And traders, thank you. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.